guys, my name's Joseph Graff. Welcome back to the channel for those of you who have watched some of my videos before. In today's video, I'm going to be talking about my M1 Finance and Robinhood portfolios. We're going to go over some of the investments that I hold in each of the portfolios. I'm going to show you all how well these portfolios have performed. And also, I'm just going to talk a little bit about the state of the market, the state of the economy right now. I know there's been a little bit of volatility lately, especially with some of the talks about a potential impeachment. And in today's video, I'm going to be getting into that. And with that being said, here's today's video. All right, guys, so here we are in my Robinhood portfolio. Currently, the equity of my portfolio is $8,536. As you all can see, today was not a great day. I was down as much as 1.2% at one point. Finished out the day about down 0.6%. This has not been a great week either. I'm down 1.1% in the past week. Actually up slightly in the past month. Down about 1.1% in the past 3 months. Up a little, up 3.7% in the past year. And all time, I'm still doing all right, up about 9.6%. So overall, I'm still pretty happy with this portfolio. Something I do want to mention is I did sell Uber a couple weeks ago, which I'm glad I did. I thought Uber would be a great stock to hold long term, and it really still could be a great stock to hold long term, but the way it was looking, I just really did not like it. I don't like how much debt they have and how they operate at a loss every quarter. It was just, kind of a combination of things that did not make me really want to own that stock. Another kind of interesting development has been Chegg. So Chegg has been a stock that I talked about a lot on this channel, and I've said that I really liked. Well, it has gotten hammered lately. It is down 26% in the past month, and over the past 3 months, it's down about 20%. It hit a high at around, it was about $45. They just announced a pretty solid quarter of earnings, and yeah, the stock was doing pretty well. But then what happened is they announced plans to acquire a company, and a lot of people did not like that. So there's been a big sell-off of Chegg, and it's gone down all the way to $30. I do think I'm going to hold on to my shares of Chegg. This is a company that I purchased with the intention of holding for 10, 20, maybe even 30 years. So for now, I'm going to keep holding on to it, even though I'm down 18%. That's not always a great strategy, and I'm really kind of questioning if that's going to be the right strategy. But if I look at the original reason why I decided to buy Chegg, it's because I thought it was a great company that would do well over the long run. So if I decide that I'm going to invest for the long run at the beginning, then I'm going to stick to that plan and be a long-term investor. So I'm going to stick it out for now. Other than that, there have not been a lot of huge developments. We're going to look at the Standard & Poor's 500 index fund. I really like looking at this fund just to get an overall feel for the market. Actually, usually what I'll do is I will check out my portfolios, like we'll say weekly performance or even monthly performance, and see how it compares to the Standard & Poor's 500. So, like I said, this week I'm down 1.1%, and if we look at the Standard & Poor's 500, it is down about 0.7%. So I actually did worse than the Standard & Poor's 500 this past week. Now, that's okay. I've certainly beat it certain weeks, and there's certain weeks where it has outperformed me. I will say over the past year, it is up 1.7%, and I am actually up 3.7%. So it's only about a 2% difference, but I do feel like I'm at least on the right track as long as I'm making comparable gains to the Standard & Poor's 500 or even, beating it by a little bit. So like I talked about in the last video, Robinhood does have this new feature where they send you like a chat that tells you if you've received dividends. So we can kind of look at this. I got a dividend from the Vanguard Extended Market ETF. I got 37 cents. Waste Management, I have 7 shares of them, so I received $3.59. The financial sector Standard & Poor's 500 fund, I received 72 cents from. The Standard & Poor's 500 growth fund that I have, I received 71 cents from. The Standard & Poor's 500 value fund, I received $1.56 from. And the Dividend Dogs fund that I own, I received $5. So it's kind of nice seeing these dividend payments come in. I'll scroll through here pretty slowly and show you all the total return on each of these investments, so you all can kind of see a little bit. As I scroll down, I'll point out some of the interesting ones. I talked about Visa, Chegg, and Waste Management a ton on this channel. Pfizer's something that I think is undervalued right now. It still might be a good opportunity to buy some. I picked some up when it was around $35, I believe. I'm glad I did it. I think Pfizer's a good company. Verizon's another stock I like. It's a value stock. I think it's pretty solid. I love Apple. Outside of that, there's not a whole lot that has particularly caught my eye. Something I will talk about is if you all see OHI, Omega Healthcare Investors right here, that's something I've done really well on. Welltower, those two are real estate investment trusts. Real estate investment trusts have gone up a ton over the past year or two. I think it has something to do with the newer tax laws that Trump introduced. So yeah, a lot of my real estate investment trusts have done really well. Since I'm on the topic of Trump, as you all have probably heard, there have been some talks about opening like an impeachment investigation into Trump. So you all might have noticed, as soon as that word of that got out, the stock market did go down a little bit. Just as a general statement, the stock market usually tends to do better with a Republican in office. I'm not saying that because I advocate for Republican policies or Democrat policies. That's just generally how it is. Usually, Republican leaders are more for deregulation and a more free market economy, whereas Democrat leaders are more likely to impose restrictions, preventing companies from becoming too large. So basically, because there's been talk of impeachment, the stock market did go down a little bit because if Trump was to get impeached, that would obviously mean that he would not be reelected in 2020. So that's kind of why the stock market has gone down. If there is anything that comes of that, if it does look like Trump is going to be impeached, the stock market will likely go down further. But it's really hard to tell what will become of that. So, yeah, that's my Robinhood portfolio. And if you all give me a second, I will show you all my M1 Finance portfolio. All right, guys, so here we are looking at my M1 Finance portfolio. In one of the previous videos I posted, someone asked me what made me decide to buy each of these 100 stocks that I own in this portfolio. So I'm going to spend a little bit of time talking about that. So a little over 40 of these stocks I decided to purchase because they're part of the Dividend Aristocrats group, meaning they've increased their dividend payments over the last 25 years, every single year. As I've talked before, and as you could probably see on the top of the screen, my focus for this portfolio is dividends, specifically growing those dividends over time. So that's kind of why I decided to select those companies to start with. After that, I picked out a few companies that I just really like. Maybe I own them in my Robinhood portfolio. An example of that is Realty Income. I've always been a big fan of their stock, so I decided to buy some of that. Another example is Boeing. I think Boeing is a great stock. Decided to buy some of that. So there were probably 30 different stocks that I just really love the company. And so I decided to purchase those stocks as well, add those stocks to my portfolio. And then the next thing I decided to do is I took real estate investment trusts and I sorted them by market cap. And I started at the top, and basically I looked at each of them and I made a decision whether I liked the company or not. And if I did, I would add it to the portfolio. If not, I would not add it to the portfolio. And the reason I decided to do real estate investment trust is I was trying to bump up the yield of the portfolio a little bit. It is based on, dividend growth, but I did want some base level of, a decent starting dividend yield. So I think I'm this portfolio's overall yield right now is at about 3.31%. So looking at the performance of this portfolio, overall, I'm up about 3.9%. I just started this portfolio in June or July, I believe, so I'm pretty happy with that return so far. We'll look at the activity here. So as you all can see, I have deposited a little bit of money since my past video. My goal is to just slowly but steadily add to this portfolio over time, and hopefully what I'm going to see is increasing dividend payouts. So I'm going to scroll back way to the beginning of this portfolio, and you all can see here, AGNC paid me 1 cent. Illinois Toolworks paid me 1 cent. EQR paid me 1 cent. I was getting really small payments at the beginning, and I'm still getting pretty small payments, but now, we're starting to see stuff like 3 cents from 3M, 3 cents from Apple, not Apple like Apple Computers, Apple, the Real Estate Investment Trust, 2 cents from Maine, 2 cents from McDonald's, 6 cents from WY, 2 cents from United Healthcare. So the money that I'm receiving is going up a little bit. It's very slow. I understand it's very slow, and I'm completely fine with that. Kind of the way I look at the money that I invest in this portfolio is I kind of think of it as money that I've spent. So I invested in here, and don't really think too much of it anymore. And then every time I see a dividend in this portfolio, it's a nice bonus to me. And like I said, I will be reinvesting these dividends to hopefully grow this portfolio more and more over time. So now what we're going to do is I am going to show you all how this portfolio would have done over the past year. And keep in mind that the Standard & Poor 500, which is usually a pretty good baseline for the overall stock market, it went up 1.7% this past year. And this portfolio, sorry it turned sideways, but it's actually up 12.5% this past year. Now, the reason for that is because I do have quite a few real estate investment trusts. And as I discussed earlier in the video, the real estate investment trusts have really done well this past year. So here you all can see my dividend yield right now is 3.29%. Another thing that I wanted to talk about for this portfolio is that whenever the stock market goes down, I actually get kind of excited because it means that I can purchase more shares of these stocks. And this is kind of a weird mentality to have, or might seem like a weird way to think, but the way I kind of see it is whenever the stock market goes down, whenever these companies become cheaper, I have an opportunity to buy their shares at a discount. So especially in this M1 Finance portfolio where I'm receiving dividends, that's kind of been my mentality. And I think you all should, maybe consider having a mentality like that too. Because if you think about it, regardless of whether you paid, $100 for a share of a stock or $80 for a share of the stock, you still have one share of that stock. So, pretty much anytime there is a dip, you do have a buying opportunity. Now, something I do want to caution you all on is if you think a company is just temporarily going down, then it's a good time to buy the stock. But you want to be careful to make sure that short-term drop is not going to lead to a long-term greater drop. So just something to keep in mind. But like I said, I'm pretty happy with this M1 Finance portfolio. It's I think it'll continue to grow over time. I'm excited to keep giving you all updates on it, keep talking about stocks with you all. And I think I'm going to wrap up the video. So thank you all for watching today. If you like this video, please smash that like button. Please subscribe to the channel, and I will see you all next time.